Moment to introduce our guest again. So we have Yogesh Bhavsar sir with us. He's an author of Relative Strength with Technical Analysis. Very good, and I must say the book is in very simple, can relate with the Indian examples given in the book. So by education, he's a commerce graduate, and he did his MBA in finance from Mumbai. He has overall 15 plus years of market experience, and his mastery is in finding stocks which are relatively stronger than the benchmark. And he has also mastered sector analysis, which is his core strength. And by profession, he is full-time trader. He also write reports about sectors and also go as a guest lecturer in MBA colleges so as to teach people about investing and trading. You also train young minds in our country so as to sail through the volatility within the market. So, a very warm welcome, Yogesh sir.
Thank you very much, and I welcome to each and everyone over here, and taking the time out to listen to me today. Uh, so,
So, Yogesh sir, firstly, would appreciate and would like love to know how your market journey started, and is it like trading from the very beginning, or initially there were different process or framework which you were following, and lately graduated as a full time trader. So how it started for you?
so I finished my MBA in 2006 and 7, and I was introduced to stock market in my old building that I used to stay, where approximate around 55 to 60% people were all traders over there. So the numbers and big numbers always fascinated me, and I always thought of doing something in big volumes that you can also match this amazing number of guys who used to sit in the evening and talk the numbers in crores. And as just a pass out from the MBA or learning in MBA, the mindset in MBA classes are only about finish MBA and find a job, finish MBA and find a job. So being in some place where the people are talking about crores of rupees every night, and being an MBA student in a classroom where people are talking about how will you get the job, so things never matched. The MBA mentality never suited me, so I segregated myself from everyone else, and I finished my MBA in finance, and I directly sorry joined stock market, not as a trader in the beginning. I started as a sub broker. I started my stockbroking sub brokership around as soon as I finished my MBA in 2007. I started a sub broking ship, which I created around 600 clients in say roughly around 400, 4 months. So the start was amazing, but unfortunately, what happened? Everybody knows what happened in 2008, 2009, and then 11, 12. It was an horrible fall because of Lehman Brothers and property market that happened in USA, and the volumes dried. So being a young guy invested into shop, having dealers, taking a sub broking, there were a lot of overheads on my head. So the frequency of the volumes kept on going down, and my commission came very low. So I couldn't burn myself too much. The first initial phase was really good. I was creating amazing volume, but it drastically came down to even 30% of my entire volume I used to create. So the income wasn't coming. So then I had to shut down my sub broking ship, and at that point of time I had only knowledge about how to invest with the help of tips operators. You instead of analyzing stock, I used to analyze people, that how many stocks is he giving and how many right stock he's giving, how many wrong. So rather than analyzing stock by chart or by fundamental, I used to analyze the guy, how many calls he is giving, and I should trade with tips and all. When markets dried down and there were no volumes and the markets were falling, there was no calls in the market, and whatever they used to give never worked. So I had a very bad phase of around say 2 3 years after that. Then I thought, why not to, since I'm in this line, why not to take it gradually and understand that how do people generate calls and how do that happen. So somehow researching, I was introduced to technical analysis, and with the help of that, lot of reports and a lot of websites, I got introduced to one of the gurus in Singapore, which I happened to go for 2 weeks over there, and I learned my technical analysis from Singapore. When I came back, I thought that everything is a rosy picture, and with the help of technical analysis, I would just earn. Unfortunately, it did not happen again. I took a loan from my dad, and what happened, what seemed to be working on the chart when the sir was explaining, it looked so simple that what was I doing for last 3 years if earning can be so simple? So I immediately started investing. Unfortunately, I lost all the money because it took a lot of time for me to realize that the charts that were shown in the screen were only those stocks which had performed as per the technical which he wanted to show. So what happens is that out of 20 stock he used to take trades, say five must have worked, and only those five must have come on the screen. But what about the rest of the 15 stock he must have got losses? That never struck me. And I unfortunately got losses in that. I had almost given up. And there is something known as relative strength index, RSI, a very popular kind of a India indicator which everybody knows. So while writing, I somehow missed index. I just wrote relative strength and I just pressed enter. And all the related about relative strength documents started opening on Google. Now, when you had tried everything and out like MACD, stochastic, divergence in RSI, and EMAs and SMAs and reversals, buying with the bottom and going up, nothing worked. So I thought, why not to give one last try and see what is happening with this. What I can say, with the God grace, or I don't know, with my forefathers' blessing, things started working as more and more I started understanding what is relative strength. All other indicators are basically, we say lagging indicators, where I found the relative strength cannot predict the future, but at least it stays with you in the current market, which helps you to identify whether your product, that is your investable commodity or a stock, sorry for my health a little bit, is how strong the stock is relative to your benchmark. I went on going in depth. I read a lot of books on it, and that's how I came up with the concept. And it has worked for me more than 9 to 10 years relative strength, which I have been working. And till date, I have not changed my trading strategy at all from past so many years. I have stick to it day in and day out because that strategy has helped me earn in bear market, and I believe the strategy which helps you to earn in bear market is one of the best strategy, and you should never leave that strategy. So that's my whole and soul story of my past till today about stock market.
That's quite interesting and challenging as well. So you talked about relative strength, and I see like this is the first chapter in the book. So let's talk more about relative strength. How to read it, and what are its? I mean, what's the significance basically, so that our attendees can know and they can dive more so as to learn about it.
Correct. So what happens in relative strength is, consider that you have two products to be invested, and both are equivalent strong performer. Say a lot of times our parents keep telling us that stock market is not good, you better invest in gold. Or somebody who do not believe in gold, they say why not to invest in properties. So what are they trying to do is they are trying to relate where you want to invest to something which is much more uh, lucrative for their perspective, but it cannot be true at that point of time. Like, consider if today, if somebody say that from say last after COVID, index has gone up, shot up very fast and in a very uptrend. So if you would have invested with the same mindset in gold, you would have not earned anything. But if you would have known with some specific tool which is relatively stronger than the benchmark. Benchmark is something that you want to compare it with. So if I knew some tool where I would have taken a selection between index, that is Nifty, or I should have invested in gold. So what I do is I take Nifty and I take a ratio of Nifty to gold. Now when you do that, a very nice like a candlestick pattern, there is one line chart. So it shows you the strength of your uh, Nifty divided by your gold. If the line is going up, it is clearly telling you that Nifty is stronger than gold. And if it would have been going down, it would have told you very clearly that gold is more lucrative than index. So it becomes very easy to for us to identify whether your product is stronger than your benchmark or not. Now consider in stocks. If today I want to buy Reliance, and your benchmark you take as Nifty, because that's how the entire world knows that what is the economy of your country. They always see what is your index, and our country index is known by Nifty. So we keep our benchmark as Nifty, and you compare your product, that is Reliance Industry, to index. Now if somebody wants to earn money, he needs to know whether you are going to put money in Reliance is stronger than index or not. If it is not, then it's better to put money in index where it is stronger. So what we do is we put relative strength as our indicator, and we take a reading of 65 and 123. That is a 65 being a small term, that is short period of 3 months, and 123 being the 6 months. So we want to know how the Reliance industry has been performing from past 3 months and 6 months. If my relative strength indicator is showing below zero, that is zero being the 0%. So if it is going below zero, then it is better not to invest in Reliance and invest in index. That you can buy Nifty Bs or something, because index is stronger than Reliance industry. But if say in the vice versa condition, if my relative strength is going above zero, so what it is trying to tell us that my product, that is Reliance Industry, is stronger than Nifty. That means if Nifty performs say in a month on month by 3%, and my relative strength of Reliance is above zero, then it clearly says that if Nifty performs by X percentage, there are very high chances that Reliance Industry can perform by 2x or 3x than the index percentage. So index if has worked say around 3% in a month, there are high probability that Reliance Industry can work more than 6% to 9% in that given period of time. So what I do is only with help of my technical other patterns being there, which shows me strength, all I simply do is whether my stock is outperformer of my benchmark, that is index, or underperformer. Like I can give you one example that the entire world knows that IT index is one of very important index that we have, that is Nifty, Bank Nifty, and then comes the IT industry. Now what has happened from last past 6, 7 to 8 months, that IT index has not been performing. So what happened, all my IT stocks relative strength started going below zero. At the same time, my CNX IT had also broken an important support level. So what happened? I got both the confirmations that IT industry is weak, and all my stocks are also showing me weakness. Why? Because it is telling me that I am weaker than your benchmark, that is Nifty. So consider if Nifty falls by 2% also in the entire month, I can fall faster. So why will I be in a product or a stock which is showing me that I am weaker than your index? So what happened from past couple of months in 2022, from last couple of weeks, Nifty fell down by approximate 17% because of those Ukraine Russia war and US interest rate and everything. A couple of news were there. Stocks like Wipro and LTTS from the top index fell by 17%, but Wipro and all have been fallen down by 42%. When the relative strength has told me that I am weaker than the index, that means if index will fall, I will fall faster. Then was no need for me to be invested in IT sectors. So this is how I correlate my stocks with relatively comparative with the index, and I take my decisions based on that indicator that I have.
So, Yogesh, I have two questions on this. So, basically, the time period which you just told, 65 days and 123 days. So, what if the both the periods are moving in opposite direction? That is question number one. And
Uh,
the second question is on, say, if the index is not the correct representation of pockets in a sector in which money can be made. So, for example, if we take BSC pharma index, right? So, the composition of that pharma space is, say, the big large MNCs, and
mm,
primarily the good pockets in which the pharma the money can be made are domestic branded pharma. So in such
mm.
case, how you go about investing in that sector which is showing strength per se, or
See,
maybe
so
the broader.
correct. So what happens is that for your first question is that what if both of them are showing the opposite direction? So first of all, I do not take trades in those stocks which are showing opposite direction. For me, 65 and 123 has to agree at one given point of time when I decide to buy. See, consider if today 65 is giving me positive above the zero, saying that at the short term I am very positive, but at the same time 123 is still below zero. I will still wait for my 123 to go above zero. Hello,
Right,
am
right.
I correct? So what happens is that in this strategy where the world is running about buying cheap, they want exactly at the breakout, they want exactly at the reversal point. To me, price is immaterial. For me, only three concepts are the most important concept. When I'm buying, are my relative strength showing me positive 65 and 123 at the time when I'm buying? Whenever I'm buying, is my higher time frame sync with my concept? What if I'm buying at the lower time frame? Then see, consider if I'm buying on daily time frame, whether weekly and monthly are telling me the same. If that happens, the third thing what happens is, am I buying the stock in the sector which I have already identified as strength? So consider if I am right now, currently, I'm just sharing with all the readers and listeners over here that right now I'm very aggressive in housing finance and insurance sector. Okay. Now, out of these two sectors, if I'm very, my story and my concept is very clear, no, I want to focus only on these two sectors. And with the help of my relative strength, some pop up comes that Tata Motors' relative strength is going above zero. I will not even waste my single second on Tata Motors at all, because it's an indicator. It will keep telling you day and night what is performing and what is underperforming. It is we who needs to decide what to be bought and what not to be bought. There are more than 5,000 stocks. At any given time, there will be more than 500 to 600 stocks giving you breakouts. Relative strength might be going above zero. And there can be amazing volumes also coming up. So we can't just keep randomly buying. We need to have sectorial analysis backing our buying. So what happens that even after buying, say your stock does not do for 1 2 months anything, but you are still patient because you know what is the sector story happening. Like an example, the tire sector which performed today, I had position in TVS Sri Chakra from past 1.5 months to 2 months, because I could see the early momentum in the tire sector, and I already decided that tire sector would be in one of my portfolios. So now, if say Eicher motor or Force motor would have given me a breakout, I had decided in an industry of big auto sector, my sub industry tire sector will be my investment, not the end use manufacturing company, that is Maruti or Force motor or something like that. So I'm very specific to the stocks that I want to buy, and even more specific in sectors, which sector I need to invest. So whenever I invest in a bunch of stock in one sector, not individual stocks which randomly keeps coming on daily basis of breakouts and relative strength going positive. So I'm very
Right.
selective in that part. And
Fair enough.
second question that you said, that how about the pharma sector and all? First of all, I will say that I hardly invest in pharma sector because somehow pharma sector has never suited me from life. I have always taken a loss in pharma sector, even it being one of the most defensive sector. Uh, I don't know the reason why, but it has never given me fruits. Maybe because of my bad reading in that pharma sector. But even if that I want to do it, to your question, it comes that as consider that if you take benchmark as a broader Nifty as your broader concept, but if you feel that I don't want to take my benchmark as Nifty, so what you can do is you can just remove the name as index of Nifty and you can type over this CNX Pharma. Now what happens when you select your broader concept as not the benchmark as your Nifty, the benchmark becomes CNX Pharma. That means you are comparing now your product, that is your stock, to pharma sector now. Now when that RS goes above zero, so what happens? You are trying to identify whether my stock is stronger than pharma sector or not. And if you get that answer that yes, the stock is positive than pharma sector, you can go for the trade. But in relatively that, as I told you, you compare in the beginning when I said you can compare index with, that is Nifty with gold, and you have to see which one is more stronger. Same way you have to do over here, whether you need to first see, because Nifty represents our country. It is where the sentiments take place. It is where the people see where the market is going. They always go to Nifty first. People don't ask what is pharma sector up and down. People ask what is Nifty today. So what you have to do is you take first as Nifty and do a ratio chart with Nifty divided to CNX Pharma, and you need to see whether CNX Pharma itself is a strong performer or not. If Pharma is outperforming Nifty, so what you can do that you don't want to take Nifty as your benchmark, you remove Nifty, put it benchmark as CNX Pharma and compare your pharma stocks to it. And if you get a nice breakout as per your strategy, good volumes, good fundamental stock, and your pharma relative strength, that is 65 and 123, both of them giving you a strong above zero entry, you can go for it. So that's how you can take care of individual sector also. So this goes for auto sector, IT sector, any sector you want to compare your product. But I would generally advise that you should need to first see whether it is stronger in a broader segment or not, that is index, that is Nifty.
Fair enough, Yogesh. So, Yogesh, you also talked about the four phases or stages per se of the market cycle: the accumulation phase, advancing phase, distribution, decline. So, would you like to touch upon and how we can benefit by knowing the various stages and we can place ourselves better?
Yes, that's a fantastic question. See what happens. The market is always divided into these four stages. Okay. Now, if a person who is listening to me today, if he gets mastery into these four stages, or maybe not even a core mastery, but even if he knows what these four stages are, he will reduce his losses, the mistake that the person is doing, by 40 to 50%. Because that's where the question lies in the life cycle, that whether you should buy the stock or not, and where to buy with the help of the stock life cycle. So whenever I am with the young students and all who do not have this idea, I always tell them that market is always in four stages. The first stage being the accumulation stage, second being the trend uptrend, where the people are local, like say retail investors, mutual fund, say syndicates, are entering at stage two. Stage three is the distribution stage, where the people, the smart money who had bought in the bottoms at the first stage of stage one and stage two start exiting. And the stage four is in the end, when all the smart money is out. And since there is no buying in that stage, in stage four, what happens? Uh, People looked at whether the volumes are there or not in stage 3 and 4. My friends, in stage 3 and stage 4, until and unless there is a very big scam like Satyam or Mr. Rana Kapoor in Yes Bank, volumes do not come in stage 3 and stage 4. Automatically, the buying has stopped due to panic, because whenever the retail traders buy, the price does not go up because of smart money. The stock automatically falls. Now, what happens in stage one is, consider that you are a promoter of a company. Like, I'll give you an example of SDBL, Soma Distillery Beverage Limited. Now, the stock started moving in March 2022. Yes, when the quarterly results were there. I'll give you a live example, which I had traded. So what happened? The entire stock from his past journey, due to heavy losses, the stock had never performed. So what happened? It was just falling from the top and it kept coming down. At one particular stage, the stock started making a base. What happens in the base? That the stock keeps moving up and down in a particular price range. Now, being a promoter, the if the company promoter is very aggressive, innovative, or who wants to make company run, he's not just going to sit. He's going to do a lot of changes in his company. So what happens? The raw material might get changed. The say the process of manufacturing may change. New technology can be brought in, which reduces the cost of manufacturing. That in end can make effect in your profitability. Or maybe say you get a better credit conditions from the people you buy the raw material. Or say you start importing something which is at a lower cost than you are taking in the domestic market. Or you make such a high technology that the dependency on the labors go down and the manufacturing processes something faster. Or you do very minor changes, or you upgrade a product in such a way that the demand in the product increases overnight in the company. So what happened in Soma Distillery, that they did some changes out of what I have told you, and the quarterly results were showing the company which were in losses. Say, consider they were losses in 50 crore loss previously before March 2022. Say 50 crores loss. In the quarter two, they made some 25 crore loss. The third quarter, they made 2 crore loss. And in quarter fourth, they came out as a positive of 6 crores profit. Now, as a layman, what we see is the stock is not falling, but when you see the profit and loss account, the company from past continuous 3 to 4 quarters, it is making losses. But to you, it should also make a difference that the losses are getting eroded. That means it is getting lesser and lesser every quarter. That means the company is doing something, that instead of losses getting higher, the losses are getting less. That was reflected by increasing sales, and it was also uh, indicated to us by OPM, that is operating profit margins. So they had changed their profit margin also, and it was accepted by the market that they were charging higher premium for that products. People were still ready to buy. Now we need to understand that promoters over here are not to do charity. Okay, they are here to earn profits from the company also, and they would definitely would like to make money from the stock market itself. So what happens in stage 1, when they are doing changes, the quarterly results, say in last quarter to this quarter, there's a difference of 3 months, and even previous quarter there's a difference of total 6 months. They are making some minute changes which promoter internally knows what is going on, and he also knows that there can be chances that my company can convert into profits, and with the help of that my stock prices may get double also. So what he is going to do, any intelligent promoter, it's not just one, it can be anybody. Say Mr. Adani also does the same, Mr. Mukesh Ambani also does the same, everybody does this. So what do? They start buying their stocks at the stage 1 without making any noise, so that people don't know something is going on. The minute they see the price is at a cheaper price, they start accumulating from the market, and they stop buying when the stock goes back to that range. Now what happened in the March 2022, the company gave a profit output of 6 crores, or maybe 2 or 6 crores, I don't exactly number, but I know that from the company was into negative. In March 2002 it gave a positive returns. So what happens, the promoter knew that my company is going to come in profit, and that's why from past 6 to 7 months the promoters were constantly buying the stock from the open market. As soon as the March quarter results were declared, Soma Distillery gave one of the biggest breakout in the price on the daily, monthly, and weekly time frame. With the same process on daily time frame, I got my relative strength positive from zero. It went above zero. All I had to do is just to know these three parameters: whether sales is going up, his profit margins are going up, and when this both are going up, whether the net profits are going up or not. I had all the three possible scenario telling me that company is a pure turnover company, and with help of that I got another one big news, is that the promoter has also increased their stake from 18%, they increased their stake to some 27%. So in the middle of accumulation from say past 12 to 9 months, the promoters were non-stop buying from the open market and increasing their stake. Now people who are putting crores and crores of rupees at stage 1, they do not do time pass. Money has been invested because it's not free, only if there is a high expectation of increasing the price, because such huge quantities are only bought by such kind of promoters or institutions only when they are very much sure what will happen in the future, which insider news only they have access, you and me as a layman do not have. We have to learn to interpret all that with the help of charts and the data that we have on the internet and the website and the balance sheets that they give us. Now, what happened within that March of 2022 to to December 2022, the stock doubled from the bottom. So, what happens as soon as the stock from stage 1 enters into stage 2? Now, people like us, like me, what we do not buy, even if we know that promoters are buying at stage 1, is because promoters have a very deep pocket. They can keep buying for years, maybe not days, maybe not weeks, but yes, I must say they can buy for years. Their buying can go for 2 years, 3 years, 4 years, 5 years, 6 years down the line. We cannot guarantee until unless stock does not go to stage 2. So when the breakout happens at stage 2, we are there present, start buying it as early as possible so we can earn the major chunk of the rally. Now, when the stock goes into the stage 2, that is where the liquidity increases. Why? Because Mr. Promoter now his stomach is fulfilled. He will come into the newspaper and say that my company has given a funda amazing turnover. story. Now we are doing this, now we are doing that, now our company has turned into profits. But he never came and told you guys when the company was in negative and they were gradually improving. Why? Because if they start making noise in stage one, he would never get the quantity he always wanted. So they stay silent, even being knowing every single thing. Now, why did they come only at the time of breakout? It's only that their stomach is fulfilled with the stock they wanted to buy. Now it is time for them to earn with the help of the stock price going up. So now they will keep coming up with new articles, and credit rating agencies will give them, from B to double A, and from double A to triple A rating, and then they'll say the company has turnover. By the time this happens, the stock from stage two has already given a rally to say around 65 to 70% on the top side. Now, when all this data is available for us to analyze in the balance sheet for yearly, quarterly results, what happens that all the data that is there, it's already discounted. Now, when the stock was available at 100 rupees, have reached 170. Now, when the stock at stage two was say 52-week high at the breakout, people were scared of buying because it's 52-week high. How can you buy it so high? Correct? And now when it is gone to 170, now people will feel that from past 3 quarters the company is performing. Why not to buy? Because now it is a value buy for them. And that's where one from the stock from 170 to reaches say 200. That's where all your smart money. Now the promoters who had the insider information that my company can get a turnover, now he has an insider information that in future we don't have a bigger business to do, because a stock from 100 reaches to 200 needs to justify with the help of the balance sheet that why it has run. It has already said because of past so many quarters we have run. But now in future, the promoter knows that I don't have any more explanation to give to people that from why the stock from 200 is going to 300. So what he'll do, when he knows that there is no future in the company as of today, he'll again come on the screen, or maybe an article will come out, or some credit agency will come out and will give you rosy merry pictures of the company. They'll show you the last balance sheet, the company turnover, and everything, so that retailers do not sell in panic. They get more excited. Now you'll feel that it's a value buying. But when you are buying, the people who are at early stage of stage 2 and the promoters and the institutions who are at stage 1 will start offloading the stock slowly. So they'll keep coming in the news until unless their stocks are not getting total exit. But now as a human we need to understand that when the news is coming good, why the price is getting flat. That's exactly where the distribution is happening. With the good news, the price are not matching with the news. You need to understand that there is something wrong. You need to identify your strong support level. You need to find out your strong resistance level. If the stock with the good news is not breaking that all time high again with a good volume, you have to identify that this is a distribution which is going on. And the minute when again the promoters and the news, there will be blank on the screen. Suddenly there will be no news, and the stock with the panic, because now there is no buying. The smart people at stage 2 and stage 1 have already exited at stage 3. Now the stock will give you a breakout on the downside. Now the people who bought at 170, the stock goes at 200, will find that it's a value buying for them. Why? Because the stock was at 170, went to 200. Now again they are getting at the same price. What will they tell? Buy it. You're getting at the cheap price. And the stock will fall down to 150. They'll say now you're getting at a discount. The stock will again fall because there is nobody to take care of that stock anymore. The stock will come back to its previous support where it started at 100 rupees. Or if the news at all dries and there is nothing movement is happening, it may even fall to 50 to 25 rupees. So the concept over here which is asked me, that consider that when say you do not know any analysis or something, or you want to buy some stocks, if you know this 4 stages, it's very easy for you to know that whether I should invest or not. If you want to be an investor, you need to be at the early stage of stage 2 breakout. If you are reading a lot of balance sheet and if you're going behind the brand names and by mistakenly you invest at stage 3 or stage 4, no matter how fundamental strong stock it is, it may go up in a later stage, assuming that uh, you should always accumulate good stock at the bottoms, but you never know that stage may come or not. Like consider a stock Wipro. I came to know that the distribution has completed and it's going entering into stage 4. I just simply exited the stock from 750 rupees, something like that, is now available at 350 rupees. Just because it is fundamental, why should I invest in stage 4? I don't have that kind of spare money in life. I might keep investing smaller chunk for my children's or my older age, but my need is say 1 year, 2 years down the line of money. I can't keep holding falling stock. So if somebody tells you that anybody from here that Mr. Govind, please buy uh, say any stock, say Tata Motors. All you have to do is go on weekly daily chart, identify in which stage you are. Right now, Tata Motors seems to be in stage 3 and 4. So I need to know that whether am I putting this just because somebody has told me should I put in the stages or not. Now, to, today and today and yesterday, we are all buying say insurance companies and uh, housing finance stocks, PNB Housing and GIC Housing and General Insurance, because those stocks, if you all read my book and if you'll see how stage 1 and stage 2 looks like, you will come to know that they have just given us a stage 2 breakout. Now, if I want to take risk, I will rather take a risk in stage 2. And if it hits my stop loss, I'm not worried because when the stock is at stage 3 and stage 4, I'm not worried. Then why should I worry in stage 2? That's why the maximum money has been made. Like say stock like in defense sector is Apollo Microsystem. I have been buying from right from 297 to 306 to 325. Today when the market fell down by 4 to 500 points, today I'm still buying at the upper circuit of 333.50 because that stock is showing me strength. So you need to buy the strength at the right breakouts at right stage. But I cannot be buying just because Wipro I'm getting at discount, because no price is too high enough to buy and no price is too low enough to short. So I would never invest in a stock which is showing me a pattern of distribution stage 3 and a downfall a stage 4. I hope this concept is very clear to all of you. If you only focus this much, you will save a lot of money investing in wrong stages.
So, Yogesh, my question on this would be like the first and third phase, right? So, is there any way to find the segregation apart from the news thing? You were saying that the good news is not visible in the price. So, is there any other way to find the segregation? And second question, necessarily in the stages, or it could be like we can have stage one, stage two, and again stage one and stage two like that.
Yeah, so that's a good question again. So in stage 1, to better to identify is what I do. I put 20 EMA and 30 EMA on weekly and monthly time frame. So whenever the stock is above 30 EMA on monthly time frame, uh, I see on the left hand side where the major selling has occurred. So that becomes my resistance area. You need to identify and train yourself that where did in the previous time the selling came very strong. If you're able to identify that particular area on the monthly time frame, and if you feel that that's the where the sellers are sitting, if once that seller area, that resistance is breached, which is about 30 EMA on monthly time frame, then there is a huge scope for this stock to outperform and go even more higher, say 70, 50, or say even 100, 200, 300% from that level. So if you are able to identify any such kind of resistance area on 30 EMA, above 30 EMA on monthly, that's where your stage 1 happens. Now what happens in stage 2, stage 3? When the stock is at a very bullish stage, or it has given you 45 degrees, say in your direction, it will start consolidating again in one range. So what happens on stage 2? Let's not give too much importance on news, because you might not be watching news all the time or anything. I just gave an example in the scenario of SDBL. But when the stock price has stopped performing in your direction, say if you're on the weekly chart, you know that minimum 4 weeks or say a month, your stock is neither making a new low, neither it is making a new high. That means it is consolidating. When that consolidation happens about 20 EMA or 30 EMA, you will come to know there is a very sideways that is happening. All you need to do is mark the initial high that it has made and the current low that it has made. That becomes your consolidation area. Now you need to know that if you bought a stock with the help of this 30 EMA on monthly time frame, say at 125, now the stock went around 250 rupees. Now it is not making new high. That is not going at 260 or 270 or 300. It has given one high at say 250 rupees. So you know that high. So all you need to do is mark a resistance, and the stock is hovering near 20 EMA. So all you need to do is mark a support where the maximum number of candles on weekly has touched on 20 EMA. Now you got that range. Now you need to observe how the stock is performing in that range. Now the day when the stock starts going below 20 EMA and touches the 30 EMA or goes below 30 EMA, you know that distribution channel has completed its duty, and this is the time where your stage 4 has started. Now it may fall or it may not fall. Nobody can predict future. But you need to exit at given point of time once. You need to secure what you have earned. So what I do is I do the same strategy. As soon as the weekly time frame, the stock start consolidating on 20 EMA take start support. If it is not making new highs, I create a very good base over there, which looks like stage 1 only. And as soon as it breaks 20 EMA and 30 EMA, I exit the stock without asking questions about its fundamentals or whether there is an amazing news which is going in the entire sector or not. It is irrelevant to me. Because what happens if you keep jumping around each and every stock depending upon stock news and stock name and stock sector, you will have multiple setups or multiple logics, and you'll always come out with the excuse what not to do. So what I have done one simple rule. If the stock on weekly time frame is taking non-stop support for like say more than 3 weeks, I will make a range of high and that bottom. And if that 20 EM and 30 EMA are broken, I simply just exit asking any questions. So that's how I identify distribution stage of 3 and 4. To your second question, does your stage 3 converts into stage 1 again or not? Yes, it does. Why? Because stock market is a very dynamic concept, there is nothing pinpoint that you can write and only that will happen. No two trades from the beginning of this existence are same. From the first trade ever has happened till date, there are no same trades. Two companies with same fundamental, with same strong management, with same stock price momentum. Still, people, some will come out with profit, some with loss, and they will still behave differently at given point of time. So when I exit or when the stock is in the range, what happens is that it is creating or it is not able to decide the direction where it wants to go. So there are two scenarios. First, say consider it stays in stage 3, what I have marked as stock taking supported 20 EMA, and it never breaks. So what happens? The stock is into the range. Now when the range, that high of 250, I made a resistance, it gives a very strong breakout with an amazing volume. So what will I see? What will I conclude of that thing is that as the stock was in the bottom, which was attracting the promoters and the institution, now at 230 also, with this strong breakout above my stage 3 assumption, now it has given me a breakout on the higher side. It has attracted new more institutions, because if you see like on fundamental strong stocks, there is no limit. Sky is the limit for them stocks to go above. Because one simple example I can give: a Reliance Industry by our forefathers was traded at 100 rupees. By our parents it was traded by some 300 500 rupees. You and me today are trading at 2600 rupees. Tomorrow our children can trade that stock at 5000 rupees. So it is not necessarily that stock will never make new highs. So there is no thumb rule that it has broken that stage 3 and the stock will come down back to 50 rupees. No, it can again break the high, and then that stage 3 converts into stage 1 and new stage 2 has opened. So what do you have to do? You have to take a leap of faith and you start investing like stage 2 again. The second scenario being, consider that stage 2 has 3 has been broken and you have exited. Like I'll give you example, in Apollo Hospital I have exited because it has broken my distribution stage 3 channel. But if tomorrow, if it breaks that all time high again, with making that consolidation phase, that new high, I mean the current high, say approximate around 1500 rupees, that 1500 to some base it will make becomes my stage 1. It will break a new level, the high, and it will convert into stage 2. Then my new buying will happen again. It's not that I will be scared and I will say, oh, previously once I bought at 600, I have exited at 1500. Now it has given me entry at 1600 rupees. How can I buy? No, you have to consider the most important uh, thing is the setup. I always tell my people, listeners, my students, and everybody is that price is immaterial. People get scared looking at price. Oh, it is too expensive. Oh, it's too cheap. But the question to ask yourself is, who defines what is cheap and what is very expensive? What is that definition? What is that formula? As I gave you an example, Reliance by your forefathers was traded at 50 or 100 rupees. Your father traded at 300, 400 rupees. I myself have seen the stock at 552 rupees breakout when I was a very young student in stock market. And that stock did not do anything till 500 to 350 rupees for nearly 5 to 7 years, and it was in that same range. It gave a breakout from 100 to 500. It is 5x. So when it gives a breakout, and when you know the company is good and it's making a good, you know, it's creating something unique in the market, why will you not buy it at 557? Today the same stock is at 2600. Again, it will make a consolidation. You might come to know the new development, what is happening in, say, something 5G is happening. The company is coming into lot of it's crazily buying things. It might reduce the debt and everything what it is taken for Geo and all. Debt reduction will take place. What will happen? It will give a new breakout. Can it go to 6,000? It can go to 6,000. It is not you and me who can decide whether it will go or not. It is the price which will say. So when that consolidation breakout will happen, you need to consider that at stage 1, the new breakout at stage 2, and you have to invest fearlessly. As price is immaterial, you need to give importance to the stage analysis and the setups that you do. Have faith in your setup. The same stock can be traded in, say, 5 years down the line, as I said, from 5,000 rupees also. It can again give a breakout. You need to keep investing in good stocks with the help of this stage analysis.
So, Yogesh, like the smart money movement, say in the accumulation phase, or maybe so it can be for a longer period also, and at times it could be there that they want to ride the momentum, or they are investing for a small period. So, how to identify the segregation in lines with the volumes? How one can identify that yes, this is stage one, and this buyer will stay a little longer, and this buyer is buying and there are very few volume spikes, and it might be the case that the seller is not interested for a very long term.
Honestly, sir, you can never know that. Because today I'm buying, say I'm a promoter, I'm buying, say, stock in a very high volume. Okay. Assuming that my company might turn around in a huge manner, and I can expect the stock to become 3x or 4x or 5x, staying for a longer time. Unfortunately, it can never be, you can never be precise in that, because when you are betting on an event to happen in future, even after you've done all your homework, that event may happen, may not happen.
Right.
So when a promoter is buying in the beginning, we are trying to ride the wave, because we as an individual, as a trader, are very small in this pond of, you know stock market. So what are we trying to do? Rather being very smart and becoming hero, and investing at the bottom thinking we know everything, we are trying to ride the trend when the trend starts. Now, when the promoter is buying, now if you see Yes Bank as of now today, the volumes at the bottom are happening from past so many years. The stock is the most nonsense stock in the market. Now, why are those promoters or the person who are buying? We would not know. Now, if Yes Bank is rising by, say, because of volumes are happening, the people who are putting the money, assuming government will help them to come out of debt and everything. Tomorrow, if government changes or anything, the event may not occur. So what will happen? The stock will again come into the pressure. We are, with the help of stage analysis and with the volumes, are only taking a leap of faith, assuming that you are taking a good stock with help of little bit of fundamental or more, whatever our knowledge is, and with the sectoral tailwind, we are trying to invest in that wind. Anything beyond that cannot. If I can say that with because of this volume this is going to happen, then I need not need to work for anybody in this life. If you are so sure in life, it does not happen that way. But yes, with the help of volumes, say assume that I have categorized my volumes into three things. That is, one is retail volumes, other is above average volume, and third is extraordinary volumes. So whenever I am able to spot extraordinary volumes, which is, say, 10x to 15x than the retail investors, I can say that the stock is meant to give you nothing less than 2x. If the stock is just giving you merely around 5 to 6x time of the retail volume, and if the breakout happens and the balance sheets and everything are good and the sector is positive, then I can say the stock will give you roughly around 45 to 55%. This is the only segregation that I do. But that also keeping in mind that even if it does not give what I am assuming, if that distribution logic happens, I have to exit when that stage 4 breakout happens. No matter what is in my assumption, does not matter. Like when I invested in Tejas Network, I did not expect it to run so much because it started with above average volume. It was when it passed the all time high, previous all time high, the volume started becoming gigantic, like extraordinary volumes, and then it started outperforming even than my expectations. But I never knew from the beginning that it can perform so well, or name it in Mirza Internationals also. So that you can never predict in that way. A stock with a very low volume or just an average volume can also give you, you know 3 to 4x. It all depends whether the person who has put the money in the initial stage has the event occurred in future or not. So it all depends on that. What we are trying to do is trying to nullify all the uh, all the news which has already been discounted in that stage 2 phase, and when the distribution happens, what it is doing next. Either that stage 3 is converting into stage 1 and making a new stage 2, or it is giving a breakdown. This can even happen in between the trend, and you might have to exit, like it happened in MRPL and Chennai Petro. It gave a wonderful 100 and 125% rally in just say 2.5 months, and it just ducked, and the volumes were skyscrapers when the volumes had happened. Like I thought that the stock will never come down, but it just gave 125% returns, which is still good. But then it just ducked like there is no tomorrow. The faster it went, with the speed of 3 times, it came down. So there is no way to identify that this is the genuine one and this is not. All you have to do is you have to play with your strategy with permutation and combinations. The more you identify the trend and more you trade the same trend again and again, again and again, again and again, out of 10 trades, if your strike rate is above 60%, nothing like it. And then you don't have to worry about the next 4 trades. It may hit your stop loss, but you cannot keep fine tuning it. A lot of traders that I, as a trader, when I was in the beginning, I spent nearly 3.5 years to keep fine tuning the stocks which were hitting stop loss. By the time 3.5 years went, and I was so frustrated, and I was with my wife, and I was like almost, broken. And she just told me what happened. And I said that I'm not able to identify why my the stocks are hitting stop loss. So she said very beautiful word. Don't cry on what it is gone. Why don't you enjoy what is there with you? And then I realized, yes, what about those 6 to 7 trades which are hitting my targets? So rather than fine tuning my this strategy, how to identify this, how to do this, how come this went into loss, how I started enjoying what is coming into my way. And that has changed my entire trading career after that.
Great, great, Yogesh. So, Yogesh, the promoter buying, or is it like float cornering or volume supply exhaustion similar, or the one you explained?
So basically, I don't categorize into, too much into deep. I just know whether the volumes are above the retail investors or not. Whether it is institution, whether it is FII, DIIs, operators, syndicate, or some, mutual fund, or hello, or an operator, I do not care on that. All I need to know whether the volumes are above average, and such kind of volumes are only generated by the, you know, few 5 or 6 institutions in this country, which I have already just named. So all they do is just take away the crunch from the market at the bottom price. So yes, you can give it a name that they take away the float possible into the market as much as possible for them. And as the stage 1 gradually increases, they start offloading their stock, because market is zero sum game. If you are buying, somebody is selling to you. So if they are able to take away the entire float at the bottom at stage 1, for them it's a very easy money to earn. Just create news in the market, the demand is there, and they keep selling it at a higher price, and we keep demanding at a higher price. That's the only game that we have in stock market.
Right. So, Yogesh, you have mentioned about the trend and trend lines in your book. So, basically, you have also cautioned retail investor that they should not, they should prefer not to go against the trends. So, basically, what's the thesis behind this, and what could be a possibly a better way to plot the trend lines, and what has to be kept in mind while plotting those?
See, trend lines depends from individual to individual. What I would suggest to all the traders over here is, first of all, identify your stocks major support and resistance level on monthly time frame. Once you have plotted that major trend lines on monthly and weekly time frame, daily time frame, it becomes very easy to spot that bottom price and the second touch that it will give. As soon as you get the second touch, that's just plot a trend line, double click the line and just extend it to the right hand side. So what will happen in TradingView? I don't know. I don't use any other software. I've been using TradingView from quite a long. So I just do what I do. I double click the line and I just, there's an option. It will come uh, extend it to the right. So as soon as you click, the stock line just becomes straight. Now, just because the stock has given a mere breakout of that one trend line, my decision do not change to bearish. Okay, what happens? Stock momentum are very dynamic. So don't be stuck to only that one single line. If it breaks down, then it is downtrend. And if it stays about it, it is only uptrend. No, you need to give stock at least 5 to 6 working days to know where the stock is going after that trend line breaks. Now, what happens when you plot one line? Because you are plotting, because it has taken support second time. Okay, that's where your trend line starts. It may take third time as a support and stock goes up, and it takes fourth time and you feel yes, you have hit the jackpot. Now the stock will go up. The minute you take, you come to know that that particular day the stock has given a closing below the trend line, and that's where the entire media and Twitter and God knows what all subscription people have taken start messaging that the stock has become bearish. Now, what happens after 2 days? The stock does nothing. It's creating a base over there. Okay, but you as a panic has just exited the stock. What happens as soon as you have sold the stock start moving back up. It goes up again, takes support at the same trend line, and the new trend has started on top, and it again goes back up. Now, this happens with the traders who are only on daily time frame. We have been taught that I will teach you something only higher time frame, and the definition of their higher time frame is daily time frame. To me, daily time frame is nothing but just a waste of time. It is one of the most ridiculous time frame a person can trade and analyze also. Okay, to know the trend, I'm sorry, but I'm being very blunt with my experience. To know the trend of the stock, you need to be nothing lower than monthly and weekly time frame. Once you have identified whether your candle is strong on weekly and monthly time frame, you need to take trades only in direction of those monthly and weekly time frame. Now we go to daily time frame only because the stock market is on Monday to Friday. That is weekdays, and that comes into the category of daily time frame. So we need to first learn to plot or identify the right support and resistance level on monthly and weekly time frame. Once you do that, go to daily time frame and spot two levels where it has taken support. Connect those two dots and double click it and extend it to the right, and then immediately shift to weekly time frame. Now, when you shift to weekly time frame, try to identify what the pattern it is doing. What happens on daily time frame? There will be 6 to 7 downtrend candles. That's where all the traders of intraday, with the help of stochastic and RSI divergence and all, they will intimate you. I told you to sell at 200. Today it is 170. 30 rupees profit. I am God. But it doesn't happen that way. People will lose confidence, and they have bought at say 150, goes to 200 and then comes to 170, and you feel, oh my god, I am done, the stock is going to come cost to cost and I'm finished. What happens? It comes down weekly, monthly, strong only. So what happens when the market gets again sideways? The stock starts performing and goes 250, 260, and every time you keep doing it because of that daily time frame. So when you draw that trend line, just do not consider the mere close below that trend line as trend change. It is not. You need to stick to weekly and monthly time frame if you guys want to earn 150% in 90% or 75% or 400% in that. And The same way you also plot a trend line on weekly time frame. If you are able to do this two things, stick to monthly, weekly, identify support and resistance on monthly and weekly, plot the trend line on daily and weekly time frame. I'm telling you, you will never come out in stock very as soon as possible as little bit also turning comes into the stock market. Because to me, I have already very clear that I like to buy high and sell even higher. I do not try to find stocks with pullbacks and buy low and sell high, because to me there is no mere definition of pullback. Like how bottom can it make to a pullback? It can go down to any level. You can't keep averaging a stock because it is falling down. So when it shows a very clear reversal pattern where the bottoms are showing that from weekly time frame there's a strong support has come, do not buy the stock just mere because it is touching, and do not even exit the stock just because it is breaking the trend line. You know, stock market is very dynamic. It will break for one day, and you will see all people plotting the same because everybody knows where are 1 or 2 3 points are there. They will connect and they will show this is the where the stock has broken the support trend line, and from here it will go down. What will happen after 5 6 days? The stock will again outperform, and that's where you lose the major chunk of income. You keep coming in out, and what will happen in the end? You would have taken 50 60 trades, and you must be only earning say around 10 to 15%, or maybe going to negative, because you would be so worked up with just trend line tradings. So only trend lines do not work. We need to know what is happening on the higher time frame. All the examples that I've shown in my book, it is with the help of the higher time frame, and then only taken the decision on the daily time frame, because we trade on daily time, on day to day basis. If I would have given an option on weekly like Saturday and Sunday, I would have never come down to daily time frame in life.
Right, right. So, a quick our attendees must be enjoying this insightful session from Yogesh. So, as a courtesy, and you can reciprocate by checking his handle, and he shares a great knowledge. So, you can follow him if your frequency matches. So, Yogesh, how much knowledge of candlestick and chart patterns is required so as to benefit with the chart? Means, is it like we need deep study, or some basic understanding will do?
See, honestly speaking, what happens is that in the market we are been bombarded with lot of candlestick patterns and lot of chart patterns. Hammer, candlestick pattern like hammer, sorry, uh, reversal pin bars and evening stars and morning stars and dojis and dragonflies and everything, and the other side being flag pattern, and then cup and holder pattern and something like that, head and shoulder pattern and all. To my friends, I'm telling you, stop mugging this up. There is nothing that is precise in this market. It's just that they keep recurring every on a very regular basis, so they give it a name so that easy for you to understand what kind of a pattern it is happening. But it may not give you any guarantee of success. All we need to know a particular level where if a demand exceeds supply, say that there is a resistance of say 200 rupees. The stock went down to 100, came back to 100, coming down, again touching 200, again coming down. So your brain should tell you that there are some sellers sitting at 200 rupees. Now, until unless that 200 rupees is not broken with a very strong strength, that level has very strong significance. There will be no chance that stock will go to 300, 400, 500 if the sellers sitting at 200 do not convert into buying, or they totally exit from that level. So all you need to do is identify a specific level where sellers are creating trouble for people to get the stock higher. Okay. So what happens is that if we see a boxing match, uh, when two people are fighting, uh, the person who is taking a hit, like with the movie that we have seen, Rocky, Rocky movie, Rocky Balboa, he keeps getting hit every single point of time. So consider that Rocky Balboa is at a resistance. He's taking hit, he's taking hit, he's falling down, he's again taking hit. But the point is, the minute he gathers that strength within himself and he just gives two punches and he knocks down the opposite person. You need to see exactly same thing in the stock market. You need to see a particular resistance level where it is getting knocked down again and again, again and again, again and again, and you know that this guy is again and again beating that person. So what happens? The guy who's buying, he's testing the sellers again and again, that if I'm buying today 10 lakh shares, is he coming with an overpowering me or not? Oh yes, today I bought 10 lakh shares, he sold me 10 lakh shares, so that means the seller has that much amount of capacity. Next time it will come with higher capacity, say 40 lakhs. Now the buyer is testing again at 200 level whether can the seller will take away 400 quantity, 40 lakhs quantity or not. He hammers again. Oh yes, the seller is too strong at 40 lakhs quantity also. Next time it will come with 90 lakh shares. Now what is happening? With the 90 lakh shares, the buyer is able to little bit go above 200 level. Say it went to 202 and it again fell down. Now the buyers knows that this seller is getting weaker because this time I am able to pass at 90 lakh quantity. I am able to surpass 200 level. It will consolidate over there only, near 200 to 180 rupees. Now the seller is in panic because now he doesn't have much more quantity to be given to the buyer. Next time the buyer will come nothing less than double the quantity which he tried the last time. So this time it will come with how much quantity? Last time he was 90 lakh quantity. This time he will come with 1 crore 80 lakh quantity. And he will just give one side breakout that the seller's entire quantity is being taken out. Now you need to see only this. The concept of stock market works where the money flows or where the money power is, price goes that way. So every price, there is constant fight between buyer and seller, buy and seller. Whoever wins takes the price in that direction. So where the resistance was that 200 rupees, the seller was stronger. The buyer kept on trying, kept on trying, kept on trying. But ultimately he judged the seller's quantity and he came with a higher quantity and he breached the mark. Now you need to understand that bridge happens with a very strong volume at the bottom. And when you see that the volumes are 5x, 7x, 10x than the retail volume, you need to know that this man who is a syndicate, FII, DII operator, whoever it is, he has taken away all the liquidity that was holding him from past 2 to 3 times. Now this level is breached. Now the sky is open for them because now no more sellers are there. Then between up and down, higher, low, higher, high, higher, low, higher, high will happen because that is the nature of the market. But that one stage that I keep telling you is from stage one to two. So what is happening? The promoters are trying to test at every level, are there any sellers present? If I am buying, somebody is selling to me or not. And at one fine day, when he knows that there is no more liquidity left by the sellers, he will just take the entire liquidity and the breakout will happen. The band will expand. Now you give this logic any name you want to give. Doji, you want to give it a name. You want to give pin bar, give it a name. You want to give hammer, you want to give it a name. You give it a name cup and holder, you give it a name head and shoulder, V shape, double bottom, triple bottom, whatever you want to name it. The concept of stock market remains the same, is that which level, who is more powerful. If you are able to identify with the help of the chart candlestick that where is that power is coming, you don't need to mug up any such kind of patterns at all. In my entire book, I must have shown one or two samples of candlestick pattern because that's what people want to hear. But when I'm seeing a chart pattern, I do not see, oh, hammer has come, oh, this has come. No, my intention to look that candle is, Who is overpowering whom? When the candle is becoming strong green candle, and when it comes down, people say it's an hanging man, but I don't see it as a hanging man. I see that boss, the stock was going with the power, and at this level there is somebody who sold in such a huge quantity that it overpowered the buyers. So this level is very strong. Now you don't need to give it a name, just observe it by your eyes, and that's what market is all about. You will end up identifying so many patterns which are not even there in the any of the textbook in the world. Only remember this concept: who is overpowering whom with money power. That's it.
So yeah, Yogesh, if we come to moving averages, so if we see, I mean, people are divided over using shorter time frames, and there are people who believe that the moving average is for a larger time frame. So what should be the ideal way of using so as to keep the things at our advantage?
See, moving average is again very dynamic depending. You cannot say that one specific, like entire world is using 200 DMA. I do not trade 200 DMA. Okay. So what happens is it depends upon the dynamics and the nature of your trading strategy. Like if you see a stock which is going in 45 degrees, so 50 EMA and 30 EMA works amazing. Now, a stock like, say, Adani Enterprises, or the stock which gave recent rally like ICE Make, Global Education, 30 EMA, 50 EMA will not work at all. You will need to change it to 10 EMA and 15 EMA. So you need to be on a weekly time frame and monthly time frame, need to know that how the stock has given you a trend. Now, if you are a weekly, monthly, if you know that the stock is going in a beautiful 45 degrees trend, like stocks like Apollo, HUL, and Nestle's, which are very, very highly liquid and very strong fundamental, for them you can go with 50, 100 EMA. And when the market crash, 200 DMA, what people use is fair enough. But if you are in a mid cap company who has a very small market cap and has a capacity to fire like rockets, you cannot stick to 50 EMA. Because when the stock say consider from 100 to 300, it has gone one directional. In couple of weeks and months, the stock has given you 3x. Like say MRPL and Chennai Petro gave 125% in just 1.5 months to 2 months. And if I stick to only 50 EMA, what will happen is my 50 EMA is so far from weekly high that if it comes and takes support at 50, my from top till the time it tests 50 EMA, it can erode my around 60% of my income, or it may come to even cost to cost. So with the help of the stock trend, 45 degrees, so 50 is good enough. If it is even more steeper, then I need to go to 30 EMA. If it is more steeper, then I have to go to 10 EMA. And if that level breaks, then I have to start exiting the stock, because that's where the momentum start losing. So you need to give very, say, EMAs should be your uh, trading strategy should be depending on your EMAs, nothing more than 40%. The 60%, as I told you, should be your life cycle strategy, which life cycle the stock is falling, and more on identifying the distribution and exiting at the stage 4 level. If you are stuck at because five stocks has performed very well in my EMA of 50, if you see, as I told you from my entire chat, that every stock since the birth of stock market or trading, every two trades are different from each other. Just because five trades have worked very well with your two EMAs, if you try the same thing with the same reading with other stocks, will not give you great returns. So it is very dynamic, and you need to change the EMAs as per the stock trend. So it's a very example that if it is gone like a rocket, You need to shift on weekly and monthly time frame to say EMA 10 or 15. It is 45 degrees, you can stay say around 50 EMA. And if it is like a very long term strong stock and that it has given long steep cuts and again going up, again strong steeps and again going up, then you should shift to 200 DMA if it is a very fundamental company. Or otherwise, if the stock is not fundamental, you cannot trade on 200 DMA also. Because if the numbers will not match the fundamentals, no amount of EMAs can help you. It if you keep changing any given point of time, a stock will take a support from particular EMA level. So you can't say yes, this EMA is perfect because five stocks has taken support at say 250 EMA or 150 EMA or 100 EMA. It all depends upon individual stock and their momentum.
Right, Yogesh. Although we have touched upon all the main important, but again, I would request, like, say, if I were to ask from a very starting point till the sell strategy. So, how you identify a sector, and within that sector, you identify a stock, and then you go about position building. And if you're taking more than one trades, how you go about diversification, and then when the criteria is like
Hmm. Hmm.
is giving a signal that it should be a sell, so you sell. So with a case study, if you would like to explain that.
So the case study I would like to give is Tejas Mirza International and Tejas Network. So what has happened, unfortunately, people do not listen to government. You know that is the biggest drawback in our traders' journey. I don't want to blame anybody, but it is the biggest problem that we are been fed with lot of Twitters. We have a lot of free gurus that are coming in, making multiple live videos on Instagram Reels. They give you five stocks and penny stocks and this stocks and that stocks. And the other thing is lot of bombarding with the news channels. Okay. So first of all, I need to tell you guys that you need to shut everything. Everybody must be telling you, but honestly speaking, as a friend, I'm here and I'm telling you, please shut all this nonsense channel, because when the markets are falling from past 3 to 4 days, I am in constant buying. I'm buying non-stop housing finances and defense stocks and insurance sector stocks because they are showing me strength. Apart from that, I just want to, since sir has asked me to tell you to elaborate with the live example and all. Maybe I'm not on the screen. I can't tell you the exact rate and all, but let me just take it 1 second. I'll open it on my mobile. Yeah, I got it. Let's take an example of an Mirza International. Now, what happens is that no matter what, I am always sitting on monthly time frame. Okay, whenever I start my day, say around. First of all, I don't even come on my screen earlier than 10:30. Okay, the people who are stuck and glued to 9:15, I am sure they must be having enormous losses in their account because they feel that trading is to be done by 9:15 to 3:30 and you have to be stuck to the glue. No, make it an investment journey. You need to give it a time and you need to have a peaceful mind when you're trading. So I am not on the screen before 10:30 at all. Okay, I am having fun with my wife, I'm enjoying with my kids, I'm traveling, I'm having nice breakfast. I go for a lot of breakfast in the morning because when the market is highly bullish, you still can't do anything, and when the market is highly bearish, still you can't do anything. So why are we trying to time the market in wrong performing time? You need to markets to be stable to invest. Okay, so my intention to tell you this thing is what I follow. First of all, I listen only to government people. I try to listen what kind of policies they are getting into and what kind of reform that can come into the market. Now, if we all remember that in 2020, 2021, we were under lockdown. Okay, so a lot of sectors were into major hit, especially those sectors which are not uh, uh, needed by day to day people. Like one of the example was leather industry. So I listen a lot of Man Ki Baat to Prime Minister. So my request to people is don't listen to opposition. This man is foolish and coming to Man Ki Baat and coming on screen and doing this and that. I tell you, this Prime Minister has been the biggest gift to this market because no one bigger than tip. I must say, this guy is giving us day and night tips, which we are not able to accept it. Government being the biggest sector of being a consumer, because they come out with a lot of policies, so they keep investing in a lot of sectors to get the output product so they can make the people's life better. It can be any government, not only this, but I'm trying to tell you this. We have this current government. So any government are the largest consumer of products. So when they come up with the policies, they make sure that they are also consuming that output that will come with the policies that they make. So Narendra Modi came on the screen and then he said that I am going to invest or going to support our leather industry because it has been hard hit by the COVID. Now only this much news was good enough for me. Now he has clearly told you guys that I'm going to put money in leather industry. Now how many stocks are there in the leather industry? Can anybody tell me? If we just have a normal open check, how many industries are there in leather industry? Not more than 6 7 stocks, if I'm not wrong. So what happens? People immediately, the leather industry comes, they'll start go and buy Bata. Okay. Now unfortunately Bata did not work because my strategy said clearly a stock coming out of stage 1 entering into stage 2 will only enter my portfolio. So what happened, Mirza International, when I was on monthly time frame, uh, I can tell you exactly the month. It was November 2021. With the help of 30 EMA, the stock gave me a beautiful breakout. And the rate was approximate around 80, no, it was around 75 to 77. My entry in that stock was 82 rupees. Okay. Now what happens? I bought at 82 rupees and I put a stop loss of around uh, the stop loss was around 68 rupees or something like that. Now what happens? I was on weekly and monthly time frame. If anybody is on the screen can see how beautiful that entire journey from uh, 78 rupees to the stock made of high of approximate around 360 rupees. Can anybody tell me how many x the returns is?
No access to screen. You can tell Yogesh.
Okay. So that is approximate around more than 3x returns. Okay. The stock turned from 86 to 360 rupees. Now, with the help of this, if you see the volumes, when the stock was under consolidation from 2019 to 2021, the stock made an range of 30 rupees to 75 rupees. Now, the stock is consolidating in the range. Now, what do you feel that Narendra Modi would have just come on the screen and just spoken like that? No. When the policies are made, there are associations of each and every industry. So, leather industry also has some association. When they come out with the policy, the head of the leather industry in the government must have spoken to XYZ promoters, association people, that please tell me what are the problems that you're facing. Please tell me what kind of policies that will make can help you. So if you will earn, we will earn taxes. So what happens in that way? There is always communication between two people. Government does not come directly. Even if it is against their industry, they will tell you that start preparing. We are going to come out with a policy that might not be very happy and good news to you. Okay, so this insider information is always present with the promoters. Now when you see the stock from 2000 2020 to 2021, the stock was the entire year it was under consolidation. When the stock was under that consolidation, we could see the volume spiking in it. Okay, so the stock from say from past November 2017 to December 2000 November 2021, for nearly 3 to 4 years, the stock kept on coming down. Now, what happened suddenly when the stock was at 30 rupees and 40 rupees, that somebody started buying in such a huge quantity? Why would somebody buy a stock which is falling? That means you and me do not know something, and the promoters has access to that information. And if you see the history, the promoters had started buying stock from the open market. They had increased their holding. And when the stock gave a breakout in November 2022, sorry, 21, that's where I had invested. Now, what happened as soon as the stock gave a breakout and I invested, what did I do? I shifted to the time frame of weekly. Okay. Now, weekly, what happens? It makes a very beautiful pattern of higher, low, higher, high, higher, low, higher, high, and it keeps going up and down. Now, when the stock made a high of 372 or 73, and it made a range of 300. So from 372, it made a range of 370 to 370, 30, sorry. And it stayed merely in that range from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. Okay. So when the leather industry investment was coming so strong in the market and everything was good, why did the stock stayed in that stage, in that range of 370 to 300 for a very long time of 10 weeks? Okay, now if the stock had to be good after 10 weeks of consolidation, it would have broken 375 with a strong volume, so that stage 3 distribution could have converted into stage 1 and new stage 2 would have started. But that did not happen. What happened in the week of 31st October 2022, the stock broke my support of 300 rupees. So before asking anything, my first thing was, when I bought at 86 rupees, 85 and 82, am I not earning enough at 300 rupees? I sold that stock at around 285 rupees, and today the stock is around 220 rupees. So that entire journey of my stock, from identifying a sector with just small listening of Man Ki Baat of Prime Minister of Narendra Modi, being the government, being the largest consumer, seeing that the person is going to put money in leather industry. So what I did, as soon as I came to know the policy, I identified all the stocks that are into leather industry. When I came to know which is the stocks are into leather industry, I started segregating them. Which stock is coming out of stage 1 to stage 2, or it is not coming out of stage 2? Where is that level where the sellers are creating problem? So that if that level is breached with high volumes, there is only sky to be achieved. Okay, so I identified Mirza International. There were volumes that were creating, and I had a very good alert level of 75 to 77 rupees. Now, one fine day, I can't keep watching every single day. So, one fine day, a pop up came as an alert on my email and SMS that Mirza International has breached it, your resistance level. So, all I had to do is again see whether the volumes were there or not. At that point of time, the volumes were skyscraper. It was one of the highest volumes in the history of that uh, Mirza Internationals. So I started accumulating at 82, 85, 86 levels. Why? Because it was the initial stage of stage 1, broke out to stage 2. Now people take risk at a higher rate and still put a stop loss at stage 2, like still put a stop loss. So why can't take a stay risk at this level only in the beginning? So I take a trade at stage 2 breakout and I just leave the stock. then I don't worry about. If my stop loss has not been hit, there is nothing to panic. That means there is some strength in the stock which is not letting the stop loss to hit. After it took some days, the stock just flew and gave me the returns of approximate around 2.5x% that I wanted. And that is the entire scenario of my journey. When it went to 370 to 300, it kept making a consolidation phase. And when you see in that consolidation phase, the volumes had dried up. So that means when the volumes were drying and the stock was in the sideways, all the people who were at stage two and the promoters had started giving stock to the retail clients, where the news I had read a report that Mirza International is a turnover company, so and so, blah blah blah. Why year on year, why the stock has come out from the losses, and the quarterly results are amazing due to the high PE ratio and EP, and they came to some valuation and they gave a very high valuation. So when people read all these reports and the TV, when they come, they start a more and more they get start investing. And when the volumes of retail buyer come, the volume spike does not happen because we retailers cannot create that volume. But these people who are smart, they started selling the stock to those retailers. Now what happens when the retailers are packed and the promoters and stage two people have given all the stock to the traders who are buying at distribution zone? The new money is not coming in for the stock to go up because promoters or institutions or DIIs are not putting money inside it. So when nobody is buying in a big chunk, where will the price go? Retailers cannot move a stock price even 5 paisa. Guys, please remember, you, me, do not have the capacity to move the stock price even 5 paisa. We just fight here and there by selling up and down. It's not you who are moving the prices, it's the big money that is moving the prices. We are just merely buying the price which is offered to us, or we are selling the stock at the price which the buyers are offering to us. That's it. We are not moving the price anywhere. We buy what is being offered to us. We are retailers. We don't have choices. Okay. So what happens? As and when at the distribution everything has been offloaded, there is no smart money, big money coming in the market, and instead of stock going up with the panic, the people who bought assuming that this stock will turn around 400, 500, the stock price starts moving down. Now, when it breaks the level of say 280 rupees or 300, panic starts. The people who bought at 370, 350, 320 will start putting pressure on the stock and they'll start exiting. And who else will exit? The people who bought it at 250 because the prices were coming closer to them. The people who bought it 230, the price is even coming closer to them. The people who bought it 200 saying that the stock is falling, let me at least book 25% that I'm earning. And what happens? The pressure builds up, and with the help of no money coming into the market, the stock price come down. So you might not be the buyer at the bottom. You might be always expensive buying at 52-week high. But when it gives you the target, when people find it valuable buying at higher price, in the previous at stage two, they were saying, no, it's expensive at 52-week high. But now they are even ready to buy it, 3x the price. So when they become very aggressive, you are supposed to get panic and you should start selling your stock when it gets down from the distribution zone. So that's my entire journey of with a live example that how I have traded that Mirza International.
So, Yogesh sir, how, if I were to ask, like, if you take 10 trades, for example, right? So, what is the
Hmm.
strike rate normally?
See, it depends upon market to market. Uh, since I aim very high, I do not aim any stock for like say 6, 7% or 10, 12%. If I feel that my targets are going to be just 10, 12%, I do not take the trade. Any trade which I feel that can give me returns nothing less than 45%, I do not enter the trade. Okay, so what happens that in that way, even if my strike rate is lesser, I am still always in profit because I am aiming higher percentage and I am losing lower percentage. But from past so many couple of years, I have always maintained the strike rate of around 65 to 67% returns. So out of 10 trades, 6 to 7 trades have always been in my favor. And as I said, I do not tweak the last 3 4 trades which do not hit my target. I just let it go. I let hit my stop loss. So I have been able to maintain 65 to 67% on my trades.
So, is there any fixed percentage for stop loss, or is it on the basis of moving averages you use, and how you trail your stop loss, sir?
So my it will be very uh, uh, very I'm a little bit high risk trader because I have always believed that when you have a very tight stop loss, you are not giving stock a breathing space. Since my uh, since my time frames are very higher, say monthly and weekly, uh, I always tend to go at a higher stop losses, say around 15%, 20%. So to maintain that 1:2, that's why I always aim for 45 and above percentage.
Right, sir. So let me read out some questions from the attendees in the comments. And guys, if
Yeah,
you
please.
have any questions, you can quickly send in a request. I saw Weber have been sending his request but unable to take. He can try again. So one question is on, I mean, okay, what is your view on water policy just announced by Shri Narendra Modi?
I have not read the entire article yet. I am yet to read it because of my health. As of now, I'm not have come to the conclusion on it. So Weber, you can just send me an DM on my this thing on my Twitter. I will come to that policy reading and get into the depth. I'll come to the conclusion only when I know what exactly the policy is and the stocks that can affect it, benefit from it, and I'll give you the entire analysis of it in a couple of days.
Shiva, outlook over 2 3 months, looking at flurry of macro level challenges, quantitative tightening and geopolitics, and overvaluation of Indian market
Hmm.
relative to globally.
See, over valuation. The question is little bit has to be framed differently. Now the thing is, who defines and what defines overvaluation, undervaluation? The stocks are performing, the sectors are performing. Our Indian markets have been outperforming and outgrowing than the other indexes right now, which are falling right now. So what we need to keep in mind is invest in the sectors that are booming and keep exiting the weaker sectors. We cannot stay out of the market assuming it is overvalued or undervalued. You can never time the market, but you can time your sector analysis, you can time your stocks. Like, consider, even if the market has been falling, uh, we are into me or my students are portfolios are growing like crazy. Why? Because we are into sectorial investment. Now when I see a lot of twitters that are coming, they just post 4 charts or 8 charts, the random stocks which are breaking out. One will be metal and one will be motors and other will be this and other will be that. And when I see them, I feel so sad that out of four, three are the stocks which are giving breakout are into consolidation or weak sectors. Then why are you even bothered about putting money? Now when you put money in the name of brand, only mere just breakout happens in the weaker sectors, then this kind of overvaluation, undervaluation, the index is not performing will come down, come in your mind. When the Ukraine Russia war was happening and everything was happening, all the index were at par. Only when all this scenario came of recession, of COVID and everything, we came to know, my God, a lot of companies, a lot of index were crashing. But even in that crash, our index has also given 17 to 18% negative returns. Mind you guys, we have not fallen less. Comparative to other countries, we must have fallen low. But 17% from the top is not a small crash. The index fell down by 17%, a huge crash. But these sectors like paper, textile, defense, leather industry, or sugar industry, the policies that government came out with saved us by identifying good sectors and performing sectors and investing in them. So if you guys, rather than putting so much of efforts to valuing index, say Nifty is overvalued or undervalued, you put that much efforts in identifying the sectors more. Even when the markets are falling, as I said today the market fell down by say 1%. My portfolio was up by 2.5% today because we are constantly investing in defense sectors like uh, Apollo Microsystem, which is hitting upper circuit from past 2 3 days. We are investing into uh, insurance and housing finance sector, which is showing great strength. So spend time on sector identification. The day when you identify that not a single sector is interest to you, and that's where you should come to a conclusion that your market are overvalued. Do not just say that just because from uh, 16,000 to it has come to 18,200 it is overvalued. Who defines that? The index was at one point of time 900 points. To we are come to 18,200 to 700. Who defines it? What is the overvalued and undervalued? Yes, to other countries we might be, but that's a good sign. Then why are we in a panic if we are performing better than the other index? Hang Seng has broken down by 52%, and we are much better in that sense to other countries. So why are we panic? If sectors are performing, we should be in fact more bold and more confident in our country then, rather than assuming it is overvalued. The overvaluation, all this only comes when you read too much and watch too much of TV, when they come with lot of valuation numbers and all. But ultimately the stocks and the sectors are performing and you are missing that opportunities. When the sector moves, the entire sector, 20, 50, 30 stocks, whatever they are, 30, 40 stocks are performing, and out of which 10 to 20% are giving you more than 100%. Entire PSU bank and private bank gave you rally. Who consider it that such big NPA stocks can give you more than 135% returns in just 3.5 months? Where is overvaluation, undervaluation game came in this? When sector performs, when your index is supporting you, you should not worry about all this. Just have a tight stop loss. Whatever you feel that you can lose the money. But one of my friend, I used to be very scared like this. One of my friend, we were playing cards, and I always used to play cards when I always had a strong hand. But he always used to win, even had a very weaker hands. And I tell me, why are you taking so much of risk in life? He just told me that, boss, in the game of gambling, in the game of manipulation, in the game of the place where you do not know the future, to win it, you have to be in it. If you are not in the game, you cannot earn. You may only say, I knew it. If I would have been there. If I just had this level. No, then only will come. I knew it. This pattern had happened. I knew it. This had happened. Don't go by this overvaluation, undervaluation. Stocks, markets are always overvalued. If anything is undervalued, you will never have money at that point of time to invest because you will always feel that it will fall more.
Right, truly said. So another question is from Shaunak. He's asking, what's your view on Nifty PSC index?
That I need to be on the chart. 1 minute. Nifty PSE, right?
PSE.
Yes, PSE. Wait. Yeah. So currently, Nifty PSE is hovering around 4,417. So, and the previous high that it has made in uh, just a second, in the year of 2008 at 4,450. I would say that wait for this 4,450 to break, and on the lower time frame let it come to retest and then show you a very bullish candle. As of now, if you have any stocks in PSE sectors, start putting a strong stop losses over there, because this is exactly the same place where I have told you that the sellers may get aggressive and some buyer needs to show three times the power what sellers are, that my friend, you are done now, no more selling. uh, till now in PSE sector that has not witnessed. So we need to be very cautious, because the price in 2000 came close by to that level. 2010 it came very close. Then again in 2017 it came close, and in recent 3 to 4 times in 2021 to 2000 it has come, and it's again and again testing that 4,450 levels. So I would say that again, do not give very much importance to the price of the stock that you might miss the rally. Give much more importance to the setup and let the PSE sector give you a strong breakout as of now.
Right, sir. So there is one question from Prasad SV. So he's asking tech stocks in consolidation mode. What's your view?
Uh, right now, under consolidation, I feel there is railway stocks which I'm very bullish. So RVNL, Ikron, I'm very bullish on them, and they are under consolidation. The other stocks that are Renuka Sugar, uh, then Ugar Sugar, I'm very bullish on them, and they are consolidating very nicely. The most very two stocks which I'm most excited about, I had also tweeted or sent to my followers, was Zen Technology. Uh, it's exactly, if I'm saying right, is that Zen Tech, right? If I'm not wrong, it's into defense. Yeah, Zen Technology. ZENTEC. The price is around 200. I'm waiting for the price to break out at 225. I have very high hopes in this Zen technology. So that is one of the stock, and the other stock is in the chemical sector is HFCL.
Right, sir. Okay, sir, I doubt like his question is more around IT tech stocks in consolidation mode.
IT sector, I am not very bullish. CNX IT, if I'm watching as of now, uh, it is hovering in a very consolidation and tight manner. The only stock which has come out in a very strong is Mindtree. So I would rather give more importance on uh, Mindtree. And the other thing is, I'm already started accumulating ITBs. So all the stocks in IT has been hammered left and right. So you can give Mindtree and Sasoff.
Right, sir. So,
So there
sir,
are two stocks.
uh, uh, you have been continuously speaking from last 2 hours, and you have a bad throat. So is it like we shall continue, or
No, no,
you'll
no
take rest
worries.
from? Okay,
I
okay.
I
So
don't mind. Yeah.
okay, great, great. So Arva Palli has a question on green hydrogen policy. He's asking how it works, which
Ha.
companies will be benefited from this
Uh,
theme.
my friend, I will tell you from past couple of days, I'm not been feeling well. So I have not read that article yet. So you can again DM me. I will get back to you on this. I have just recently came across this policy. So I need to go in depth, and I'm just waiting for this weekend to sit and analyze all these stocks, because
Right.
I still need to identify the stocks which will it get benefited, and what. And the main thing in this is just not the news. I need to also see that how big is the capex also.
Right.
So when Narendra Modi had told that we are going to put a lot of money into the education and all, but we came to know that the capex was too small. Even they were putting money, then the Navni did not perform as we had expected because the capex was too small. Like, what would you do with such a small capex? It's just a small mere information. So small companies which have a very small market cap, like global education, and had performed in it, but then you can't expect too much of movement in that small capex. So I need to know the entire capex also. So I'll get back to you. Just DM me, my friend.
And guys, for your information, once sir gets well and have a look at those sectors, we can have a Q&A round to our convenience.
Yes,
So,
yes.
and for that, I would request, like, despite having bad throat, he has been continuously adding value to you guys. So you guys can reciprocate by checking his handle, and you can give him a follow. That can give a necessary motivation so as to share more of his knowledge and thoughts through the platform. And again, any names taken during the conversation are purely for illustrations. Please don't act on any names. The host and I won't be responsible for that. As a disclaimer, we say it. Our spaces are educational, and please take that as a starting point, because you might hear the name and act on it. You can make great losses. So be very cautious and be very about it. So, Yogesh sir, I have a few more questions from the attendees. I'll read it out so we can quickly take those so that anyone doesn't
Yeah,
feel
please.
left out.
Please.
And
Yes.
in case we have something more to discuss, surely we have another round so as to discuss this interesting thing. So, another question is from what's his name? Ashish Chaudhary. He's asking, like, my question is, does weak or sideway market has a different approach in regard to allocation in stocks? For example, I have reduced my weightage to half in swings. Is that a correct approach? And additionally, I have a question on that, like, what is your cash position you keep, and how you rotate between the sectors? What is the theory, I mean, when you rotate between the sectors? Yeah.
See, now what happens, market always moves into sectors, okay? So if the big money identifies that currently a particular couple of two, three sectors are getting at a very lower valuation, they will shift their entire interest into that, the stocks which are getting at a lower price. So what happens, the stock which have already rallied, now example, sugar sector, paper sector, textile sector, defense sector, they all have given you a beautiful rally. So what happens when the stocks stop performing? The entire retail industry identifies that because of EMA crossing and trend line breaks, they feel that it's done. Momentum ho gaya, it's done. But it's not like that. Whenever sector gives a breakout, my friends, remember this, nobody will tell you. It's very few people who knows this. When the sector gives a breakout, sector do not break out only for 2 3 months, or they do not break out just to give you merely 10 to 15% returns. The sector break out nothing less than 1.5 year to 2 years of rally. And in that span, any given sector that they had invested, say 1.5 or 8 to 9 months before, today that same sector can come back into a demand. So you need to keep a track that which sectors were giving breakouts. Like PSU sector, I had identified into December and November 2020. Unfortunately, I couldn't find any great stocks at that point of time because no stocks were giving breakout. But if you would see that the time that I had given, PSU, CNX PSU had already, PSU banks had already started outperforming. And what we did was, instead of finding stocks we started investing into PSU banks Bs, because the stocks were so hammered from last couple of decades that no new breakouts were happening. Yes, they had stopped falling and they were performing like 3-4%, 3-4% weekly. But there was no investment opportunity because we did not knew the future. We only knew that Prime Minister Narendra Modi is going to sell the stake of PSU banks because he doesn't want the NPS on his head anymore, which was a good news for us. But no stocks were giving information. So what we did, rather than putting money into stocks, we started accumulating PSU Nifty Bs at the rate of 18, 19, and 22. Today, the same Nifty Bs is somewhat around 48 and it reached to 52 as a high. So opportunities are everywhere. So in 2020, we had identified that PSU private banks are going to rally. It is in 2022, last September, October, November, the rally came. So in span of that entire 1 year, we couldn't find any investment opportunity in the banks. And it was like a span of 3 months, all the stocks were like say 40, 80, 90% plus. Look at other stocks like that. So what happens is that uh, when you are talking about sectorial and everything putting money, what we do is we remove 50% from the sectors that have given rally and then they stop or they go sideways. Okay, but we do not come out from those sectors 100% because we know that the sectors can again perform again and that stock is not going to go down again. It will start consolidating. So what we do, we remove 50%, and as soon as there is a new performing sectors like we had exited the railway sector 50%, sugar sector 50%, defense sector 50%. We had also exited 50% in one more sector, I don't remember the name, and we were in cash. And then when the new sector that came out, that is housing finance sector and insurance sector, now we are aggressively investing in them. And one of the stock which is there in defense, that is Apollo Microsystem. And the cable industry, yes, the cable industry is a new industry that we have identified. So the cable industry was that Paramount Communication we had invested on in the rate of 29. Today that stock is approximate around 45 something, hit a upper circuit, and around 45% something we have gained profits in merely around just say 10 to 15 days of time. So what happens is that we keep identifying new outperforming sectors because money is always limited. You need to be really quick, fast, and aggressive to identify sector. Unfortunately, we all spend time more on identifying stocks. My entire focus is only on identifying sector. So the minute when a sector gets sideways, I don't take time to come out in that sector in 50%, stay in cash and invest in new sectors which are entering into stage 2. And I am always in cash 30%. Yes, I am a bit aggressive. I am always invested 70% in the market if there are couple of 3 to 4 sectors which are performing. And I will just go a little bit beyond that. In every sector, I would invest say in 50% of the performing stocks. 50% I will not, because I don't want to expose my money in one sector more than 50% of my cash. So say I have 70% invested. In that 70%, I allocate to particular sector specific amount, and in that amount I invest only 50% and rest I keep it with me, so that when those stocks which are showing strength, I keep building up my investment on every higher price. I do not enter stocks which are falling down and try to buy weak and sell high. I don't do such type of trading. In my book, there is one concept known as pyramiding concept. Uh, the concept revolves around how you keep adding the strength and keep exiting the weakness. So when the stocks are falling, I do not touch because there is no definition of a stock to how much can it come down. But when the stock is creating new highs, it has only one definition. that it has broken the previous high. As soon as it shows me the strength, I keep adding to my portfolio. So I always have 50% allocated in that sector, 50% I hold it in cash, and whichever stocks keeps showing me the strength, I keep adding into my portfolio. But the minute that sector shows me the sideways, I immediately exit 50% of my portfolio, and I keep, rotating my portfolio into to emerging sectors.
There is one question on PSU Bank. So they're asking, is there any strength left, or how we should go about the sector? This is the question.
PSU Bank, the rally is not even started. It is just mere beginning of a beautiful future in PSU Bank. Uh, this one same question had asked to me in one of the forum, and I just told those guys that if you would remember, somebody would say that my forefather had bought this XYZ stock. Today I am enjoying the fruits. The PSU sector is the beginning of that. You child will enjoy that amazing fruits of these stocks. So if you are only concentrating on PSU banks, then just wait for the markets to fall, and when the stocks start giving you strength, start investing. Again, wait. When the markets are falling, don't do anything. When the market shows strength and the stocks are showing you strength, again investing it. There is one student of mine who only concentrate on one sector till the entire sector does not give you a downtrend. So he only invest in one sector every given point of time, even it means taking trade only 4 times or 5 times in a year. So I feel that PSU bank sectors is just the beginning. In fact, the entire PSU sector is just the beginning of that. If we are at the tip of that iceberg, the entire iceberg is left. So if you just concentrate on that sector stocks, you do not need to see anywhere. The only problem what we face in stock market is that we are bombarded with a lot of telegram channels, a lot of groups, a lot of good people, a lot of news channels, a lot of reports, a lot of information that we keep asking and discussing people, that there are so many stocks available to trade. But if you narrow down and shut it, and if you just concentrate on that PSU, uh, as somebody wants to only PSU bank, if CNX PSU bank gives you a breakout of 5,300 level, this is the future. So,
Any view on industrial gases?
as in, can you elaborate the question?
This is question from Rafiki. Any view on industrial gases? Is the sector
Acha,
showing
guessing.
repetitive?
Gases and distribution. I am not tracking it, so I don't want to give you fake. But I will just see CNX. Is the CNX gas sector available
Yogesh, no idea. Maybe we can reply to him later. Not a
later on?
problem.
Because I don't know whether the gas and the sector is there, because I just don't want to give him the vague answer.
There is one question from Ravi Nambiar. So he's asking a stock like Tata Elxsi, which is in long-term uptrend but short-term downtrend. How do you decide to when to re-enter?
Now, if we see Tata Elxsi on the monthly time frame, it has come to test your 30 EMA. Okay. Now, on the weekly time frame, it is showing you no strength. But if sir is very confident about its fundamentals, so I would advise him to wait for the stock to go above 30 EMA on weekly time frame to at least show the strength and intention of it to go up. It can be expensive than today, but at least you need to buy the intention of the stock that I need to go up from here. Because if the IT sector is consolidating and if some brother is saying that Nifty is overvalued and it falls down more 5 to 6%, this stock can go even more down because IT sector is right now very weak. It's into consolidation, but the direction is not decided. But it has broken that distribution channel. It's in the stage 4. And when the stock gives you stage 4, we cannot decide the bottoms. So hold your guns of buying, understand the market pattern as of now. IT sector is doing nothing great about it. You can buy a little expensive, but let it go above 30 MA on weekly time frame.
Right. So Vishnu, you can quickly ask your question.
Yeah, I just want to know about the Bajaj Finance thing. Like, is
Okay,
it
let
a
me
good
just
time
check.
or how we should do?
Bajaj Finance. Bajaj Finance.
And guys, let me be very clear. If you are asking for a particular stock, the opinion shared is just what is visible to him on chart. That won't be any buy sell recommendation. Let me reiterate very firmly and again. Please, please don't ask it from the point of view of buying or selling. Just take it as a starting point. Yeah.
Yes. My friend, you cannot do not buy this stock as of now because it has on daily time frame clearly showing there's a huge weakness going on. It has just broke the strong support levels of 1500 and some 1570 and retested and shown you the weakness. The stock can test uh, even just a second. Yeah, the stock can even test as of now 1440 and 1390. So hold your buying guns. Let the Bajaj Finance show some respect of the momentum and the numbers that it has been showing as of now. Lately, it had already told you at 1818 levels when it was not able to break that high. Remember, I was talking about that resistance is not breaking, that level is not breached. So it is telling you something about that stock. So as of now, from my end, please do not add it. If you have bought it and if you are very sure about the stock fundamentals, you can hold it because if you see the past history, it has performing very well. But from COVID, this stock has not been that great. It has given an uptrend movie, but it has just gone back to its old high. It has not created any history levels. So from COVID, this stock has been struggling. So I would suggest do not fall into the trap of cheap buying. Hold your buying guns in the stock.
So Suma Sandeep is asking how to narrow down sectors while choosing. So basically, he must be asking about screeners and how you filter the best sector out of them.
So basically, I very much aware what is like just because of my health is not well as of now in couple of days, but I'm very much aware what is going on into the market. My if you see, I use very normal common sense when I am walking and talking to people. I talk less and hear more about the people of different industries, what is happening. So what happens is that when you listen more and take more information, you come to know what sectors are moving. When Gadkari is telling you that he wants to enter into ethanol with the mixing to the petrol to the 50% level, and we have not still reached even 20% also or 30% also target, we know ethanol is a very big story. When we know that there is a movement in the EV sector, but nothing great is happening. So we need to know that you don't need to just press the EV gun in Tata Motors. So that is the interpretation what you need to take it. Now the best example is the metal sector. Metal sector right now is booming. So we know what is going on into the market. It's just that you need to convert it. As I said that I'm a very big follower of market government. Government had already told in the market that I'm going to make our country defense independent, and Hull, uh, then our Musgao and GRSE and all that stuff, who are manufacturing arms and ammunitions and submarines and ships for us. And we have still not even started much bigger exports also. Now we are going to go to the capacity of 30 to 40% of manufacturing, get India independent, and we are going to start exhibiting our products in the market. And we might start selling to the neighboring countries, which we have started doing to most probably to Malaysia and all. We have got an order for aeroplanes, jet, and everything. So we are going to give more bigger capex. We just had a capex of 90,000 crore in that sector. We are going to come with more capex in it. So you need to understand when the news are coming, what is the future scalability. Like I gave you an example of education when it said that I might do something in education, but the capex was too small. It didn't have the scalability at all. So what happens when the scalability is not there in the capex? You automatically need to minus that sector from your selection. So when the news come, you need to know, is there any further scalability available? Like we are going to go into railway structure infra. So Bharat something railway has been manufactured by Titanagar wagon and all that stuff. The bogies are being made. The train infrastructure is increasing. That's why RVNL and all is increasing. We are saying that we are going to connect lot of more stations. Railway infrastructure is going to increase. Then there is a lot of logistics that is coming into railways now. That's why the entire corridor has been created. So from your door to the railway, there will be cost reduction that will give and boost to the railway infrastructure. So that all you need to understand with the help of the sector investment, that how big is the bandwidth of it. So that will depend upon individual to individual how it is pursuing or trying to grasp that information.
So one question is on how you identify sectors which have no sectoral index currently, like sugar, insurance, housing, cables, etc.
So honestly speaking, I create custom index. I don't want to go into marketing and all as I don't want to promote it or go in this field. But how I create my entire sub sectors and all that stuff. I identified couple of stocks in that sector with the help of my reading, like leather sector, sugar sector. Then when people say that we are entering into railway industry, but then they consider IRCTC, but you need to know that IRCTC cannot be part of that sector analysis. So I eliminate and I create those custom index in the trading view, and that's how I teach my students how to create those index and how to take benefit of those custom index and invest in those stocks.
Right. So another question is on, if possibly, could you please illustrate case of Coastal Corporation, which is in marine food business, in terms of its stage and consolidation? This question is from Shiv.
Can you give me the name again? Coastal.
Coastal Corporation.
I'm not able to find that symbol. Any short form of that stock? Let me check. A second.
Yeah. And one person is asking about Lende India for what the chart is saying.
Why is this Coastal Corporation not coming? Let me just get back to this boy. COASTC. Huh. So now see, this Coastal Corporation has lost the entire momentum. Right now, the rate of the stock is 233, and if we see on the monthly time frame, this stock is too far from the 30 EMA. Sorry, this stock in no ways in my radar will come into any state. This is pure stage 4. If this stock lose momentum below the all-time low of 220, the stock can even go to 100 rupees. There is no bottom of the stock. So whoever my brother has asked, if he is holding this stock, either should consider it having a strong stop loss, but do not start averaging at the bottoms. To me, this stock has no future as on today.
Right,
The
Yogesh. So,
the other
so
friend asked for Linde India, right?
right. Linde India and IIFL Finance. These are two last questions we have.
Okay, Linde India. Okay, Linde India is on the weekly. It is consolidation. Yes, on the monthly time frame, it is creating pure consolidation. So this stock is under my radar. If the stock breaks the high of 3,725, then I would add it more to my holding. This stock is pure under sideways consolidation of giving a major breakout again.
Right. And any views on chart of IIFL Finance?
IIFL. So IIFL has given a strong breakout from the previous all-time high of all-time high in 2018, and it has come down and it is giving you a strong uh, retest. If the stock breaks 520, one must definitely get this stock into the portfolio. Even if the person is buying right now, can have a strong stop loss of around 435 and hold the stock with utmost confidence, because I feel this stock can do wonders in future.
Right, right. And I just got DM for Webao Global if you can check, sir.
Webho, Webho Global. Okay, this Webho Global is pure under stage 4, and one must avoid to do any averaging or even consider right now buying at all in any situation. And what happens a lot of time when we do not see such kind of uh, life cycle of the stock, we intend to buy breakouts that happens in daily time frame, and then when the trend goes back down, then you start scratching what went wrong. But we forget that the stock from clear has given indication of distribution in the month of August 2021. It broke the most important level of approximate around 750 levels, and from there it has entered into stage 4. So this stock can go down if the stage 1 previous, this stock can test even 170 levels. If it did not, it may go above right now, say above 30 in monthly time frame. But till it does not go above it, this is pure under stage 4. 100% to be avoided. It should not come even on your radar, even in your analysis or anything.
Right, right. Is it similar to the IX way? Is it going?
Can you spell out IX waves?
Indian Energy Exchange, IEX.
IEX, yes. IEX energy. So, yes, correct. So IEX exactly gave a stage 4 in the month of again January 2022 with the rate of 230. And from there, it had confirmed that it's into stage 4. And from there, from 230, it came down to 140. So if this stock does not go above 170 or 180, have to be very precise, above 180, this stock can test the level of 111. And worse come, I have also heard from the news that the IES exchange, which was having the monopoly in the industry, there are bigger chances that the more competitors are coming into the same exchange. So the monopoly that it enjoyed, it's gone. So, and that's why the entire rally had come down. This is the information that retailers had no idea. There are a lot of videos that are circulating that IES is available at 50% discount and the top. Guys, don't invest. If the competitor declares that we are coming into the market, this stock will lose the charm. So it can go even more 50% from down. It is clearly in stage 4.
Right, sir. So Harjeev Singh Chadda has a very interesting question. He's saying, in trading view, I have only been able to create price weighted indexes.
Hmm.
How and if it's possible to create equi weighted indexes?
Remove the multiplication that you are doing. Just take it. You don't need to give any weightage to any of the index in the stock. Then it becomes a breadth analysis. So if you don't want to give weightage to them, remove the numbers that you are multiplying and dividing with it. Just take normal stock number names. That's it.
So one question is again from Shiva. Could you please share some learning resources for stage analysis, both A by V and reading? Acha, audio, video, and reading. So Shiva, the book I must recommend, and any additional resource, sir, if you want to tell him.
See, honestly speaking, I again don't want to propagate, but if you read my book, and I have made couple of 3 videos. I am not making too many videos because every topic, if you type, there are more than thousands of video already available in the market. So I don't want to enter the space anymore. Where the where there is so much of jargon in the market, I don't want to be one of those again. So if you read my book, and if you go on my Telegram this YouTube channel, which is Yogesh Technical Analysis, this thing, you will find life cycle video over there. I have just made four videos. Out of them, one video is life cycle. So you read my book and you read that and you see that video. If you understand this, I'm telling you, your 50% work, where to enter and which stock not to buy, your work is done. When you know what not to buy, automatically what to buy becomes your easy chapter. The only problem with us is the minute somebody tells us without knowing which stock and which uh, cycle it falls, we just buy because it is which it is cheaper and we just buy. As IEX is there, there was Weber was there. Just because it is cheaper, we buy. But as I told you, there is no definition how low can stock can go. IEX can fall more 50% from here. Who are me and you to decide that it cannot fall? Just because it had last wonderful 3 years of better results, cannot next result quarter come in negative. How can we decide it will not? Price factors everything. From that high, it has fallen down to 60%. There has to be some information that you and me don't know. So give more importance to this life cycle. Go and see that video of mine and read my life cycle chapter and the book. You will get entire idea about it.
Great, great. So there are many questions coming on stock. So ऐसे तो सर सुबह हो जाएगी. तो we keep those questions for next spaces and next
Huh.
Q&A
If
round.
if somebody has a broader question, I would happy to answer, but let's not go into single specific stock.
Right, sir. I think we covered most of it from the comments, and perhaps we have more questions on the discussions. And guys, those who listened late or maybe joined late for this discussion, they can surely revisit to the recording, which I'll be placing over my YouTube channel. And trust me, guys, you won't get such a simple and insightful session at one go. So as a courtesy, you should reciprocate by connecting with Yogesh ji. He has been doing considerable and great work. And let me reiterate, this session is purely educational, and my I'm vouching for this book because I have read this, and there is no commercial interest from either Yogesh or me. I'm just saying because I like the book personally. I have gone through it, and that's a very simple book with the examples in Indian context. So technical made easy, if you ask me. And Yogesh, anything else you want to add about your book,
Yeah,
or maybe?
so yes, so I want to add one thing about my book is my book. I think so when I have read a lot of books, not too many books are created in the market who tells you where precise to buy and precise to put your stop loss and where to add your stocks and what to add. We and my publishing house has worked very hard in this book, and we have find out the problem that when people read all the other books, when the book is finished, they still have the question, brother, still where to buy? I don't know. You read the entire book, you read the calcium book, you book read any book, where to buy, where to exit, you still not come to know. But if you read my book, we have worked so much hard in this that we have given you exact entry points, exact stop loss places, exact strategy that I use. We have just left out one or two concepts which are very debatable, and it may work for me, but there are some smart pants in the market who always have a problem to pinpoint, and you keep waste your time with bombarding with unnecessary creating controversies. We have just left out couple of topics, but my entire strategy which I have been using from years, mark my words, from years, I have poured down dot to dot in that book. I do not use any other strategy than this. So be assured that when you are reading, you are all not wasting your time. That's the only thing I want to. So I just want to convey that confidence that if you would give your time in that book, you might use it, might not use it, but whatever you are reading in that book is a very genuine content. So I don't trade something else and show something else. So a lot of traders who have 10 other strategies to be sold in the market, they come up with a lot of courses and this and that. One should understand that if there are so many courses, what strategy does that guy actually uses? Ask that question to yourself. I have just one strategy, and that strategy is poured into that book, and I've been using it for years because human tendency, greed, and fear has not changed from day one since the humans have been come on this earth.
All right, greatly said, Yogesh. So we have Harjeev. So he has a follow-up question on the previous question he had asked. So Harjeev, your question would be last question for today. You can unmute and ask your question from Yogesh.
Yeah, good evening, everyone, and good evening, Yogesh sir and Prince. Thank you for having this session. योगेश सर जस्ट फॉलो अप क्वेश्चन कि भी अब जैसे मैं एमआरएफ एंड अपोलो टायर का अगर मैं विदाउट वेट्स बनाऊंगा सो इट वुड मोस्ट प्रोबेबली बी स्क्यू टुवर्ड्स द एमआरएफ ड्यू टू द हाई प्राइस वर्सेस अपोलो टायर्स
Fair enough.
so how do I make it equated so that just the percentage is reflected for the
No.
entire tire sector? ये
See,
क्वेश्चन
Harpreet ji, right? Your name is?
हरजीव
Harjeev ji. See, you're trying to take away the essence of that analysis. Why are you trying to identify very precise industry? अगर suppose सिर्फ MRF ही भाग रहा है or only Apollo is giving you the context, how does it matter? You will not end up finding any particular stock, but at least you will know that this sector is running. When I used to give weightage, the lower weighted stocks when were performing, my sectors were not moving only because the higher weightage were not moving. So I missed out so many stocks. So what I did, I removed all the weightage. Now even the smaller companies when they are moving, my index are moving. So at least I know something is going on in this index. And if
Okay.
then I need to waste time or I need to dedicate my just 15 minutes. Say, consider if I come to know that uh, tire sector is moving because some smaller companies are moving. Forget about MRF. MRF did not move. Smaller companies. My index will move. When my index will move, how much time do I have to give, sir? 10 minutes from those beautiful seven stocks. If it setups from stage one to stage two, I will invest. If it doesn't, how does it matter? forget it. But at least you came to know something is working. If today assume that lower weighted stocks are moving, which can give you the percentage of around higher 25 to 35% returns, and uh, overweight are giving only 4 to 5%, where are you making more money? In lower weighted stocks. But when you're
Yes, sir.
giving weightage to them, your index will only not move. How will you know that those are working?
Okay, okay, got it, sir. So I'll go through your book completely. I've just ordered it about 2 days back. आज ही
Okay.
आई है, in fact. So maybe
Thank you so much.
it's a New Year gift. So if I have any follow-up question, I'll send you a DM and I'll trouble you again. Thank you so much for having this session and
Thank
sharing
you
your
so much.
knowledge.
Thank you so much for ordering, sir.
Thank you for your question, Sarjeev, and I must appreciate the effort of Yogesh today. It's almost 3 hours, and despite having bad throat and cough, he is handling the questions with great humility and composure. So Yogesh, before we close, any concluding remarks on your part?
First of all, thank you for listening to me so patiently. Thank you, Prince, for having me here. Um I don't know how much I have sounded convincing to people or not, but I have tried to be very honest in what I have been doing, and what I have said is what I have done. Uh, there are a lot of what I'll say is I have tried to come out with a lot of other jargons in the market that have been coming out. I would request to people, please do not follow just because somebody has many followers. Because when the market will go sideways, these are the people who will run away the first. Identify good people. Please listen and dedicate your time what government is trying to implement in your economy, because they are the highest consumer of a product. If they come out with a policy, make sure they are the perfect tips that has come out in the market. And if you just concentrate on one or two sectors in a year, and if you keep finding great stocks which is entering into stage 1 to stage 2, just go with your gut feeling, put a good stop loss, and for god, do not waste your time on daily time frame. Please spend your time more on weekly and daily, so you have lot of other great things to be done in life. A stock market sticking to the screen is not the way to earn money and make your double money. I will say that in this total market fall of around 17 to 19%, my portfolio this year has grown to 124%. uh, I have made double in this year, even despite being a horrible year, is only because I have invested in great stocks and sector analysis stocks. So focus more on sectors, less on stocks. Price are just, uh, you know, stocks are just the medium to earn money, because you can't put money in sectors, you have to put money in stocks. Okay, so price is immaterial, I would say. Don't fall that so and so stock was available at this price, now it is this price, now it's too price high. Nobody can decide that. You give more focus on setups, stage analysis, and go for the trade. Because if you have 10% of your stop loss, let the stock be 3000 rupees or 30 rupees, your loss is 10% on 30,000 rupees that you are investing. So the loss at 30 rupees is also same. Loss at 3000 rupees of a stock is also same. So think in that perspective. That's the only conclusion that I would like to give in the end. Thank you for everyone to listen to me patiently.
Great thoughts, Yogeshi. And guys, like we guys have been working so hard and spending so much of time with you guys. So you guys can reciprocate by following our handles. That gives us the motivation so as to bring more good content in front of you. And I run a YouTube channel by the name of Accidental Investor Prince, and I upload all the podcast which I do. Already 63 podcasts have already been uploaded, and today's session would be 64th. And that is, trust me, a gold mine of information, sectoral information, technicals, fundamentals. I'm not saying you make a concoction or a mix of everything, but whatever interests you, you can tune in and revisit and listen to the people who have spent 15, 20, 30 years in the market. And yeah, obviously, your motivation is a trigger so as to bring more people and uh, again learned people again and again, so as to uh, help you with your questions and the market intricacies. So with this, I request Yogesh ji, if you have anything to add, or maybe about my spaces which I conduct.
Mr. Prince, I must say that uh, you are a person who is very has a very good conviction to find great gems in the market. I would like to say that there are a lot of offers to me to come to the podcast, but they come only because they need someone to fill the space on that date. But I have seen, Mr. Prince, that he is so particular about the quality that he spreads into people's knowledge, that he is in constant touch with me, that to what I'm going to share, to what quality I'm going to share, to what his podcast is related to, and what is supposed to be, you know what is to be the boundary line that has to be discussed. There is constant update. I had to postpone one. He had been very much supportive because he knew my health was not good. um, he has been a jam of a person. I must feel that the people that he gets, I'm very sure that they would be much higher quality than what I am. And I must appreciate and great round of applause for a person like you who's doing so, because I see that everybody has a family in the end, and I keep seeing that every day on Twitter Mr. Prince is doing some or the other podcast late nights, and then he's giving so much time to this investment family across country, that everybody is able to hear some or the other part of the experts and learning so much from the others. We are also learning from people's question, because when the questions are there, we don't have answers to everything. Even we are learning from the process. We are also updating ourselves day and day night. So uh, uh, thanks to Mr. Prince for being so clear and so strong and so dedicated to his work. I hope that I hope he loved my podcast, and he would once again invite me with amazing people like you all over here, and I can get another opportunity to, spread what I have uh, got new experience in future. Thank you very much, sir, so for having me here today.
Thank you so much, and that's really nice and so considerate to say big words to me. But yeah, again, I put in a lot of effort. That I agree, because I do my homework before inviting any guest, so that I get to learn about his framework, his process. I If there are videos or books available, I try to get touch of those, and I frame questions around their ideology, and then I ask questions. And again, after this, the all YouTube thing, it takes a lot of time.
Yes,
But
because I
again, this
remember.
is
I
this
just
is
want
out of passion.
I just wanted to add one more, that before he even invited me, he made sure that he reads my book, and it is like, uh, after reading the book, am I will be able to give some more extra knowledge to the people who are listening over here. That's a very big thing, that a person is taking so much efforts in that. That's great stuff, sir.
थैंक यू योगेश भाई एंड ट्रस्ट मी गाइस कोई कोई कमर्शियल इंटरेस्ट नहीं है कोई कमर्शियल इंटरेस्ट नहीं है लेकिन आई कैन वाउच फॉर द बुक दैट इज वेरी सिंपल टू रीड एंड वेरी इंटरेस्टिंग एंड केस स्टडीज को देख के आपको अच्छा लगेगा एंड आई डोंट थिंक कि इट इज ओवरली प्राइस्ड नॉर्मली आई डोंट से दीज थिंग्स इन माय स्पेसेस एंड आई कीप प्योरली अगेन जो मेरे को अच्छा लगता है मैं बेबाकी से बोलता हूँ बिकॉज आई एम क्लियर अबाउट वट एवर आई डू एंड वट एवर आई से so these sessions are purely out of interest and there are no hidden commercials or anything. In case down the line, if I have anything of that sort, I will openly tell my attendees that yes, this is commercial thing or this is that. But again, let me be very clear. Our guests have been so kind to me, and they agree to my request. And yeah, I try to put a little effort. And trust me, Yogesh, yours is the first technical book which I read, and it's totally worth it. I've been reading so many books from last 2 years. So yours is one good one. So with this,
Thank you, sir.
I take your leave almost 3 hours.
Yes, sir.
So guys, this session will be recorded and will be placed over my YouTube channel. So if in case you are not yet aware of the channel, you can search by the name of Accidental Investor Prince, and you can subscribe, like, and share. And in case you have any feedback which is not positive, even then you can reach me out. And trust me, if you have any good names which can add value to you, you can surely tag me or DM me. I'll reach them out. So with this, Yogesh, once again, thank you so much, and please take care of your health. We meet soon again.
Thank you, sir. We'll be looking
I would
forward to
just
it.
like to add one thing. The book is priced peanuts. 400 रुपए की ना एक बियर भी नहीं आती at a good restaurant. So I think you should have priced it a little higher.
I
No,
hope my
no.
publisher is listening to that.
Harjeev, it's like we can think it other way around. It has been kept at a price deliberately so that it is
Yes,
accessible to more people and more people can benefit from the stuff. Yeah.
the intention is only that things need to be highly priced only to make it, you know, presentable or make it worth it. You can be low price and you can reach more people because this is an ocean. So the more and more number of people read it, the bigger the ocean gets, not smaller.
Appreciate your views, sir. मतलब कि it's like your 10, 15 years of 20 years of experience in the market is being, distilled into just a couple of hours reading. Really appreciate it. Thank you so much.
Thank you, sir, so much.
Thank you, guys. Good night. Phone battery is about to die, so I close it before that. So, okay, take
Thank
care,
you.
guys. We
Yeah,
meet
good
again.
night, sir. Thank you very much. Bye.